Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Bhutra, and these are the top stories this Monday afternoon. Midcap trade flat in a volatile session. PSU banks, IT surge, metal see a slide.
Strong quarterly earnings drive Federal Bank higher. The lender reports record high net interest margin as numbers exceed street expectations.
Bullish brokerage commentary and strong earnings give mid-cap public sector lenders a boost. IOB, Bank of Maharashtra, Union Bank surge up to 8% today. Motilal Oswal is positive on the space given the healthy return ratios.
Just jumps on strong growth in revenue and profit while record quarterly sales lift Sula Vineyards.
Well, the story in the last 30 minutes has been the recovery in the banking space. The Nifty banking index was down more than 200 points. And as we speak, the banking index is up 80 points. So from the day's low, the Nifty banking index has recovered close to about 280, 300 points. The reason is the earnings so far have been pretty good. Over the weekend, we had HDFC Bank. That looked good. And now in the last 30 minutes, numbers from Federal Bank and Bank of Maharashtra are looking very robust. Is this a sign of things to come? The street seems to think that. But look at the way State Bank of India, Kotak Mahindra Bank, these stocks have spiked up in the last 30 minutes. All the three banking numbers that have come through so far have been good. And it ties in with the quarterly updates that we got through many of them over the course of the last fortnight. So we'll take stock of them. Abhishek is here with us in the studio. Abhishek, Bank of Maharashtra and Federal Bank, strong numbers?
Well, all the lenders have seen increase in their lending rates, and that is what is translating into strong NII growth and the net interest margin improvement that you are seeing across banks. So to begin with Federal Bank, the all-time high net interest margin and the numbers have beaten our poll are the highlights of the result. The net interest margin has come in at 3.49%, which compares to 3.3% in the previous quarter. NII growth on a sequential basis is more than 11%, the best growth that you are seeing in 21 quarters. And YOY, the growth is more than 27%, which is one of the best that you are seeing in last 6 years. So a 5-quarter low in terms of cost to income ratio, which means that their operating efficiency has improved. Best return ratios that you are seeing in last 30 quarters or even more. ROA at 1.33% and ROE now touching close to 16% level. Asset quality, gross NPA ratio at 2.43% is the best in 21 quarters. Net NPA ratio, which has come in at 0.73%, is the best in last 30 quarters. The restructured book has also declined. It's now at 2.22%, perhaps the lowest that you are seeing in last 7 quarters. Volume wise or value wise, the restructured book has declined by 4% on a sequential basis. In terms of P&L, both the NII and PAT have beaten our poll. Bank of Maharashtra, robust earnings momentum seen over here along with improvement in asset quality. They had already given the business update, so we knew that they had a strong loan growth in this quarter as well. So asset quality, gross NPA amount-wise down 8.5%, net NPA amount-wise down 27.5% quarter-on-quarter. Gross NPA ratio has declined to 2.94 when compared to 3.4 in the previous quarter, and net NPA ratio now below 0.5% versus 0.68% in the previous quarter. PNL, robust momentum in the NII, up about close to 30% YOY and 5% sequentially. Other income has grown robustly, up about 27.6% sequentially. So operating profit growth is very strong, close to 36% YOY and more than 8% sequentially. Provisions are up this time around. We'll need to wait for the commentary as to what has caused the spike in provisions. However, PAT is up more than 138% YOY and about 22% sequentially. So strong earnings momentum seen for Bank of Maharashtra as well. Back to you.
Oh yes, both these stocks are doing well and we are looking at the markets as well. They have seen some recovery and PSU banking index, that is the top gainer. So as we said, yes, PSU banks are continuing their gaining streak. Brokerage firm Motilal Oswal is in fact bullish on this space. Abhishek is back with us with all the details on this note. Abhishek.
Well, Motilal has given out a note on PSU banks wherein they say that it's the homecoming of ROA or return on asset. So profitability of the top 7 PSBs that are there under their coverage has improved or will improve to about 90,900 crores in FY23. This compares with a loss of close to 60,000 crore that they had in FY18. So the top 7 PSB under coverage have delivered an ROA of 1.1% over the 10-year period, that is FY0. FY04 to FY13. So they estimate the top 7 PSBs to report a PAT of 1.3 trillion, which is about 1.3 lakh crore in FY25, which compares to a loss of little under 60,000 crore that they had in FY18. So this will drive the ROA and ROE to about 0.9% and around 14% plus respectively. So average book value for these PSBs are likely to grow at a higher rate between 12% to 23%, which compares to about 14% to 19% gain that they expect for large private banks or top private banks. So consistent performance on delivering the healthy return ratios can lead to re-rating of these PSBs. Their top picks are State Bank of India, Bank of Baroda and Canara Bank. Back to you.
Okay, but thank you, Abhishek, for that. But the market continues to be very volatile. Bank Nifty is back in the red yet again. It's down 10 points as we speak. Nifty 2 is down 33 points. So we'll have to see whether this momentum continues or not. It continues to remain choppy as far as the Bank Nifty is concerned. Let's do one thing. We'll slip into a short break. On the other side, Manish Hatirumani of Deendayal Investments will join us for a technical check on the market. Stay tuned.
The 53rd annual meeting of the World Economic Forum in Davos is currently underway, the largest conglomeration of global leaders. The big challenge here at Davos that is going to be up for discussion and deliberation is the possibility of global cooperation. Fiscal space continues to be challenged and constrained, and monetary policy seems to run out of options. What can the private sector do to try and push growth forward? There are going to be several important sessions that CNBC-TV18 is going to be part of. We are the only channel to get 3 sessions on the Davos main stage, and of course we have a whole host of global leaders that we will be in conversation with.
Welcome back. Well, the Bank Nifty is unable to make its mind because in last couple of minutes we saw 100-point fall from the top. The Bank Nifty, which was in the green when we started the show, around 80 points, is now back in the red. Again, it is down around 12 odd points as we speak. So volatility, of course, continues to be the theme of the day today. But let's see whether that continues or not. Let's get in a technical check on the markets. Manish Hatirumani of Deendayal Investments is joining us now to do just that. Manish, good afternoon. Thanks a lot for joining us. Well, what are the charts suggesting? It's been a volatile session so far.
Good afternoon to you and to all our viewers. Well, like you correctly said, yes, we are in volatile times. We have kind of increased the range from the lower end to the upper end. If you were to look at Nifty in specific, that 17,750 level still seems to be the challenge. We did come down to 761, but we were unable to break 750. That's why the range continues. The downside will get started once we break that level of 750 on a closing basis. Until then, the upside resistance continues to be at 18,300. Unless we don't get past either range, we will not see a quality move.
Manish, afternoon. Could you help us with some trading ideas in individual stocks?
Well, from the mid-cap space, I'm working with 2 buy calls. The first one is on IDFC Limited for a target of 93.50, stop loss of 83. 86.70 was the recent high which was recorded on the stock. We have crossed that today. The second one is on LMT Finance, which is a buy call for 101, stop loss of 90. Here too, 96.35 was a recent high, which we have crossed today on the back of good volumes.
Okay, all right. So those are 2 picks by you. Thank you so much, Manish, for joining us and taking us through those charts and your individual technical picks as well. Let's stick to the mid-cap theme now. This is our favorite mid-cap movers segment, and we have Vivek with us as always to take us through the mid-caps that are moving around in trade. Vivek.
Well, good afternoon. Well, it's lackluster session as far as the broader end of the markets are concerned. Not too many wild moves that we are seeing today, and in fact even in the 52-week high and low list, not many names over there as well. Some of the themes that are doing quite well, UCO Bank, Union Bank, Bank of India, PSU Banking, sharp recovery continues for these names. Moving on, some of the stocks that we are highlighting today moving up on strong volumes as well. So specialty restaurants up today after a while, also seeing HEG on the back of stronger electrode prices. Adani Green, after a while this particular stock is moving up today on strong volumes as well. And Ease My Trip, this particular stock has been very volatile, but today up on strong volumes. Some of the other stocks that we are highlighting mainly on the back of very strong volume action that we are seeing here. Newgen Software, this particular stock is doing well. Also seeing Triveni Turbine after a period of underperformance, this particular stock is moving up, and Craftsman Auto today up as well. On the other hand, some of the stocks that are seeing quite a bit of selling pressure, both of the multiplex names, PVR on the back of the Kotak institutional equity downgrade, as well as Inox Leisure, both of these stocks down over 4.5%. Fact, extreme volatility here continues. This particular stock, moving around 4%, either side today on the lower side, and JSPL cooling off a bit from recent highs that this particular stock has hit.
Okay, thank you very much for that. We've been talking about how PSU banks are moving up. Well, even other financials like Bandhan Bank, pull that up. Bandhan Bank is now spiked up. It's up close to about 0.7%. But from the day's low, Bandhan Bank has seen a recovery of close to about 1.5%. IDFC Limited is at the high point of the day, so that stock is up and about in trade. So across the board, financials are actually having a pretty good session. For the Nifty per se, we're still below 17,900. It's a cut of 57 points. Sensex down 150 points. As we get into a break, here is an important piece of information for all our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list. Welcome back. Let's talk about individual mid-cap movers. National Standard India. This is a stock which has surged 63% in this month itself. That's year to date. Sonal, this is a subsidiary of Macrotech Developers. Tell us more.
Yes, that's right. And it's an unusual move because fundamentally nothing has changed so much in the last 15 days for it to surge 63%. As you pointed out, yes, it is the subsidiary of Macrotech Developers and has seen a huge move. In last 12 months, of course, it's down around 42% as well. The company reported its earnings. That is, again, a P&L statement there. It's a real estate company. So, yes, P&L does not matter so much because it differs as per accounting standards. This time around, their revenues came in at around 6 crore rupees. This compares with 2.62 lakh. Their profits surged as well, and most of it was driven by their other income, which came in at 2.8 crores versus 4.4 crores on a YY basis. Of course, it fell, but it was PAT was aided by their other income, which included interest income, which is on loans, fixed deposits, and also they got some miscellaneous income as well, and that is something that aided their other income. Now, about the company, as I said, it's a real estate company and has one residential project by the name of Lodha Grandeza. It is a mixed-use development project. Now, India Infoline in an article earlier had indicated that Macrotech Developers told them that the listed subsidiaries, including this one, does not have any material business or future business plan. NSAIL had development projects in the past, most of which they have been completed now, and they just have few investments and few inventory left in their books. So, for stock to surge so much, there is no reason, so to say, that we saw on the exchanges as well. Now, remember, back in Jan 2022, Macrotech Developers had announced a merger with this particular subsidiary, including the others, and the ratio was 9 shares of Lodha for 100 shares of NSIL, which was not favorable for the investors of National Standard India Limited. The stock did see a sharp fall then. Last year, it was down 42%, but a sudden surge, Rima, and that's what puts spotlight on this, that the stock is up 20% today and 65% this month itself.
Very interesting. And what about Anup Engineering?
Yes, so this is the one I'm focusing on. The numbers were reported on Friday during market hours, but the stock has surged today in trade as well. So just thought let's quickly look at how the numbers look this time around as well. Of course, there was a revenue growth of 143% on a year-on-year basis. EBITDA also went up by 109%. There was a margin compression of around 300 basis points, but profit after tax, that also surged by 133%. The company says that their order book as on 31st December 2022 stood stood at 566 crore rupees, and they have good execution visibility as well in coming quarters. Exports are 25% of their overall revenues for the company, and in terms of outlook, they are targeting on consistent better performance going forward and reducing the skewness of volume between the quarters. So that is the order book execution is what they are focusing on. One of their phase in the Kheda plant is going to be commissioned by March end, so that will incrementally provide for some more revenues. Merger of their subsidiary, that is the Kheda plant company, is initiated, and this will also help in execution of the existing order book. So some levers that the company is talking about, and that's the reason why the stock is higher in trade today as well after reporting numbers on Friday.
Okay, the other stock that's on fire today is Just Dial. In fact, it's locked in an upper circuit of close to about 10%. They came out with numbers on Friday post-market hours. So the stock is reacting to its earnings picture, and the earnings picture is telling you that things are on the mend and things are improving. Now, Just Dial went through a very tough time post-COVID because it is exposed to the SME segment, the small, medium enterprises, and their revenues got shrunk and hit very badly during COVID. So, in fact, even today, despite very strong numbers, the revenues in Q3 are lower than what we had in COVID. Right? So that gives you an indication that it's been 3 years, but still the company is unable to recover. That's because of its client base. It's all the SMEs and SMEs segment. But basically, here are the Q3 numbers, and you can see that things are on the mend. Q3 revenue growth was about 7.8% on a quarter-on-quarter basis. On a year-on-year basis, revenues are up nearly 40%. That's a very strong improvement that we've seen. And you can see the improvement on a quarter-on-quarter basis. Margins have improved for the third consecutive quarter, and now it's at a 7-quarter high. It's a 12% increase in the company, 12% margins that the company has reported. Profits are up 44%. Other very important metrics like paid campaigns, right? It's not just about having free listings. It's about having paid campaigns. That's gone up 19.3% on a year-on-year basis. Their collections have seen an improvement. The deferred income, which will reflect in the subsequent quarters, has also seen an improvement. What brokerages are saying is that the valuations are attractive. The market cap of Just Dial is about 5,500 crore. Nearly 4,000 crore is cash in the books, 3,9 something, right? So that's about 70 to 73% of its market cap after the 10% up move is, purely cash. So if you look at the EV, X of that, Citi says it's actually very attractive, which is why they have a buy rating. 735 is what the target price that Citi has on Just Dial. And despite the 10% up move that you are seeing today, the stock is still down 27% in the last 1 year. So this is a stock which was hit because it was this new age, not new age tech company, it's an old company, but it's still a tech platform company. It got derated as because of COVID, the fundamentals went down, and also the valuation multiples got compressed because of rising interest rates. So the low of Just Dial was 520 in June of last year, right? At the peak of the fear of rising interest rates. So now as that fear is abating, a lot of these tech companies like Just Dial, RateGain are to some extent seeing the valuation derating come to an end. And coupled with the fact that fundamentals are improving, you've seen Just Dial do pretty well.
Okay, so of course the fear that, there will be something more worse is going away. There will be improvement is what we are watching out for. But RateGain Travel Technologies as well, Rima, we spoke to the management today and the stock is higher as well in trade today. It's up around 4% odd.
Absolutely. So, the guidance from RateGain management was very strong. They said, we've been guiding for 30% revenue growth. That's going to continue. So this year, FY23, we will end with 570, 580 crore of revenue. Next year, they're targeting at least 800 crores. That's a 30% jump. But their internal projections are much higher, 900, even 1,000 crore. On margins, they're saying that every year our margins will improve 200 to 300 basis points. So fundamentally, they're saying that, and even though discretionary spend inflation may hit, they're saying it's not impacting travel. People are willing to cut back on other costs, but they're not willing to cut back on travel, and that seems to be the experience. So all their clients, so they have OTAs as clients, hotels as clients, all of them seem to suggest that, demand is very, very robust, and that's what's baked into the RateGain's projections that the company's made.
Okay, so the stock is high by 4%. People want to travel, but what's happening with the markets is people are selling from the top. Bank Nifty is down 170 points. It is seeing a sharp cut from the top, and that is something that we're seeing in Nifty as well. So Bank Nifty is at the day's low. We have Nifty, which is down 80 points. Midcap Index index, which was down around 28 points, has doubled those losses. So yes, there is some selling pressure that we are seeing from the top, and a couple of these names, the likes of SBI, we also have other names like HDFC, ICICI Bank, HDFC Bank. All of these stocks are at the day's low, and that is something which is putting pressure on the markets as well. We'll do one thing, we'll take your leave on this edition of Midcap Radar. Stay tuned, your stocks when we return.